Okay, so what happened here today was we have been challenging the 25,000 level on Bitcoin all day until about a few minutes ago. And a few minutes ago, something changed, and I'm going to show you what changed. We had the ECB rate hike decision, and they actually raised rates by 50 basis points. Now, there is something that the market's not seeing here. So short term, I agree. The market should maybe come slightly down, because what it shows is that the EU is not yet scared of the economy breaking. But there is another chart that we should look at. This chart over, I'll find it. A good chart that we need to be looking at. It's this chart over here. And it's a chart of global liquidity against Bitcoin. And this is the chart that we're going to be focusing on today. Because when you focus on this chart, what you realize is that maybe the market's actually getting it wrong. Also, we're going to be talking about the Arbitrum airdrop. The biggest crypto airdrop in history is now launched. Breaking news. It only launched 3 or 4 minutes ago. We're going to talk about it. We're going to tell you how you can get tokens. We're going to show you if you qualify for tokens. And I'm going to show you what the effects of this Arbitrum airdrop will be on the total market. It's going to be one of the biggest shows we've ever done. So get out of bed. Get out of bed.
Get the fuck out of bed, bitch. Go. Get up, and they got go. Time to wake up, bitch. Get up. Get up. Get up.
You see, everyone thought that the EU would play chicken and actually back down on their interest rate increases, but they didn't back down. They did 50 basis points. Now Powell is watching this and going, well, what do I do? What am I supposed to do? So let's just see what happened as a result of that. Before the show, the probabilities of a 50 basis point rate hike were 73.8%. I'm going to refresh this quickly so we can quickly just see. Must have changed. Must be more towards 50 basis points. 25 basis points. Crazy. It's more towards no interest rate increase in the States. So look, we're going to talk about that today. We're going to talk about the biggest crypto airdrop in history, which has been announced now. Have a look at this. Biggest crypto airdrop we've seen, and there's going to be big effects on the market because of this.
All in position. It's time. Commencing Operation Land on my count. 3, 2, 1.
It's time to onboard. Let's f***ing go.
Begin.
Go for Arbitrum airdrop.
Let's build Arbitrum together.
March 23rd is the big day. Now the question is, are you going to be getting Arbitrum? Also, what is this Arbitrum airdrop going to do to the market? We're going to talk about that because it's going to do a lot to the market. So listen, welcome back, guys. Lots to talk about today. Another one of these crazy high alpha shows that we do, but this is going to be like an additional dose of alpha. So listen, yesterday you guys did an amazing job subscribing. We're almost at 613, or are we already at 613,000 subscribers? Not yet. We're almost at 613,000 subscribers. So help us get there today. Also, listen, like this content, share this content. Is Sheldon still trading or not? I will cut his head off. Tell him not to make me come there. Tell him not to make me go there if he's still trading during my show. All right. So if you're not already subscribed, subscribe. If you're here, just like this content, give us some more comments. One thing YouTube has told us that you guys aren't commenting in the comment section. That's penalizing us. All right, let's get into the alpha. There's a lot of alpha here today. Lots to talk about. A hell of a lot to talk about here today. So the first thing is we've got the Bitcoin chart. Let's look at the Bitcoin chart. And I want to show you something amazing about this Bitcoin chart. What the Bitcoin chart has been doing is it has been challenging this 25,000 level all day. You can see this is the hourly chart. It's been challenging. Now remember, every time that it does this, what happens is it breaks away some of the resistance. That happened until about here. And the reason why it happened here is because we got the ECB rate decision. A lot of people thought that the European Central Bank would not increase its rates because the banks are collapsing. But what they're saying is something completely different. They're saying, look, inflation, too high for too long. ECB data-dependent approach needed. They stand ready to act as necessary. They're saying their banking sector is resilient. They're saying their it should be tooling kit is fully equipped. Remember yesterday we spoke about Credit Suisse. Well, let's quickly get an update on Credit Suisse. So the market's not open yet, but you can see in the pre-market, even though this went to 175 yesterday and took down all the European banks. You remember we spoke about this European bank run. In the pre-market, it's trading at 232. We'll check it again in about 3 minutes when the market starts. You can see that the rest of Europe is also looking a bit greener than it was yesterday, including the banking sector. So their banking sector is looking a bit better than it looked yesterday. Not great, but a bit better. And the reason for that is because, as we anticipated, as I said to you yesterday, if Europe believes that Credit Suisse is going to collapse, it's going to be bailed out. It has to be bailed out. It's just too big to fail. If Credit Suisse fails, then a lot of the other banks will start failing, and lots of economies and companies in that will go down. So that's what happened yesterday. There was a bailout that was announced. So Credit Suisse intends to borrow. So it's a lending facility up to 50 billion Swiss francs from the Swiss National Bank. That was the announcement that came out. In fact, here is a copy of the announcement. It comes from the Swiss National Bank and FINMA. They issued a statement. The interesting thing about this statement is that they say they're giving them a $50 billion facility, but they're saying Credit Suisse's stock exchange value and the value of its debt securities have been particularly affected by market conditions. We know that. FINMA is in very close contact with the bank, but they said that the bank, FINMA confirms that Credit Suisse meets higher capital liquidity requirements applicable to systematically important banks. In addition, the Swiss National Bank will provide liquidity to globally active bank if necessary. So what they're saying is, look, this bank is not insolvent. This bank actually has everything going for it. Everything is going for this bank, but at the same time, they are worried about the bank going down. So they have given it a $50 billion credit line that they can use. I want to show you this. So, and I mean, I know we've spoken about Credit Suisse. Credit Suisse is not a great bank. It's a bank that has been on the decline for a long time. If you look at the Credit Suisse chart, and I mean, you go back in history, you can see that this bank has actually been on a one-way journey down. It's a bank that was one of the giants of banking. Let me put this onto the weekly chart. But it actually has been on the way down. I mean, it's gone all the way from $76 in December 2007, and it's got yesterday touched $1.78. And it's not a clean bank by any stretch of the imagination. This is a bank that's received billions and billions and billions of dollars worth of fines. In fact, $11 billion worth of fines for toxic securities abuses, for tax violations, for investor protection violation, for economic sanction violations. This is not a great bank. It's just, I think the best way to say it is that it's not a great bank. And even if it does offer it, it has in Asia been offering 7% interest, which is much higher than the normal interest. But clients are still saying, listen, we actually want out of this bank. You got off your stream, I'll kick your ass. Sheldon streaming while I'm live. That's crazy. So bottom line is we have another bailout. Another bailout means more liquidity. Now, this is the most important topic of today's show, because you have to understand that Bitcoin is actually all about one thing, and that is liquidity. When you have more liquidity, Bitcoin and then of course crypto goes up. When you have less liquidity, crypto goes down. You can see it from this global liquidity chart. Now, I'm going to show you today how there is a lot of liquidity coming into this market, and that this liquidity is maybe not being respected by some, and that's why Bitcoin is at 24,700. I also believe that within 24 hours, Bitcoin's going to break $25,000, and I'll show you why, because I think the market will realize how much liquidity. Remember, today's keyword in class is liquidity. Today is all about the keyword liquidity. You'll need, I don't know why people are phoning me while I'm on the show. It's got to be very urgent if he's phoning me while I'm on the show. The keyword today, liquidity, liquidity, liquidity. That's all it's about. And I'm going to show you where all this liquidity is coming from. The first part of the liquidity that we're hearing about is the Swiss central bank. Okay, so you've got the Swiss central bank backstopping Credit Suisse to the tune of $50 billion. Now, it's not about the $50 billion. The $50 billion is just one small part of it. But they are sending a message that if big banks are about to collapse, well, they will backstop those banks. And so even though here they talk about $50 billion, it's about making sure that the bank doesn't collapse. And that brings liquidity into the market. And as I said to you before, Bitcoin loves liquidity. As I've spoken to you for the last week, even though the US is trying to tighten, unfortunately, this tightening isn't working. So what you're getting from the US, as I said to you, you have the Bank of Japan now putting a lot of liquidity into the market. You have the People's Bank of China, which is the central bank of China, putting a lot of liquidity into the markets. The US, yes, they are trying to reduce, but they're not succeeding in reducing. And so they're still putting liquidity in the market. Okay, why? Because even though they're trying to do quantitative tightening, the Treasury is drawing down on what they call their general account to fund operations, and money is flowing out of the Fed's reverse repo facility. So net, even the US is putting liquidity into the market. And as I said to you before, the more liquidity, the more Bitcoin goes up. And you've had a lot of liquidity events happening. You've had the Bank of Japan, the Bank of China, the Swiss bank bailing out the central bank. And then you also have more liquidity coming into the market. And that is in the form of a huge $2 trillion airdrop that the government may be bringing into the market. And let me explain to you where that came from. So, you know, when Silicon Valley Bank collapsed last week, the Fed said that they're going to bail out depositors. And they bailed out depositors through this new, what's the word? It's a program. Okay, now this program, which it bails out the banks, is called the BTFP. Now, you know, when the US government comes out with 4-letter words, that means money comes into the economy. So this one's called BTFP. It's called the Bank Term Funding Program. And this allows for the banks to use their loans, to use their instruments against collateral. So they say, look, if you've got a T-bill, you can get 100% of the par value of the T-bill. And this is designed to protect the banks against collapsing, like Silicon Valley Bank collapsed. And so what analysts believe here is that this Fed program alone may provide $2 billion of liquidity into the banking system. So I read this article. It says the Fed's emergency loan program may inject as much as $2 trillion of funds into the US banking system and ease the liquidity crunch. And this is according to JP Morgan. They say the usage of the Fed's bank term funding program is likely to be big. Strategist led by this guy that I can't even pronounce his surname, but I can tell you he's Greek and he lives in London. He said, while the banks are unlikely to tap the program, the maximum envisaged use for the facility is close to $2 trillion, which is the par amount of all bonds held by the US banks outside the biggest five. They said the US, okay, so in a nutshell, what the US Fed have done is by backstopping the banks, they have created an additional $2 trillion worth of stimulus that could hit the economy. Now, you want to see how big $2 trillion worth of stimulus is. That is the Fed balance sheet. Now, up until the 2008 collapse, the Fed's balance sheet never really went over $2 billion. And then again, the biggest growth in the Fed's balance sheet was when we had COVID in 2020. Now, every time the Fed's balance sheet increases, what it means is that they're putting more money into the market. Now, they put a whole lot of money into the market over COVID with all the stimulus and all the other programs. But then you can see it when the Fed balance sheet got to $9 trillion, they started to try and reduce the balance sheet. They weren't very successful. They went from 9 trillion, 8.9 trillion, all the way down to 8,385,000,000. And then something broke. What broke was the banking system breaks. And we always said that the Fed would continue with its tightening program until something breaks. Well, now something has broken. And as a result of this something that's broken, according to Nick the Greek, because we can't pronounce his surname, if anyone can pronounce it, let me know in the comments how to pronounce it. It's 𝗵𝗍𝗄𝗧. No, I think I got that right. I think I got that wrong. I think I definitely got that wrong. Anyway, he says that the banks, the Fed, is putting in an additional $2 trillion into the economy. Now, I don't think I need to remind you, but I'm going to remind you because some of you have very, very, very short memories. But do you remember what happened to Bitcoin when this global liquidity increased aggressively? I'll tell you, Bitcoin went from about under $10,000, went from about $6,000 or $7,000, and it went all the way to $69,000 because of this increase in liquidity. And now what we're saying is that there could be another increase in liquidity. This time, just the Fed program is another potential of $2 trillion, which is coming into the market. Now, it may not be the full $2 trillion. Correct, that's true. But it does show that the Fed is changing its tune. The narrative is changing. I want to show you some more about the narrative changing in the Fed. When was the last time that we heard a Fed president? So this is coming from a former Boston Fed president. And he says, financial crises create demand destruction. Banks reduce credit availability. Consumers hold off on large purchases. Business defer spending. He says, interest rates should be put on pause until the degree of demand disruption can be evaluated. So now the narrative is starting to change. It's all about perhaps pausing. And you can see that if you look at the CME chart right now, it does jump around a lot, which is why I've just refreshed it, because we have to see what the effects of see it even in our show. Right now, 28.4% of no interest rate increase, and then 71.6% of a 25 basis point increase. We will be here next week on the 22nd when the Fed makes their announcement, and we will be watching this live. So make sure that you're here with us. Cool. So that is the $2 trillion stimulus that is coming into the broad markets. That on top of the Swiss government bailing out the Swiss banks and sending out a signal that the banks, if you're big enough, you won't really be allowed to go down. That's effectively more stimulus. And then you add that to the People's Bank of China, which is doing more stimulus, I think. And then you add that to Japan, which is adding more stimulus. James says, Fed net liquidity indicator soaring higher as Bitcoin continues to track it. UK, EU, US, Swiss, bailout, Japan, all these things put together shows that looking at the balance sheets of Japan plus China plus the ECB plus the US, they've actually grown by 1%, with China leading the way with 1.27%. Now, that doesn't sound like a lot, but when a balance sheet of $9 trillion grows by 1%, that's a lot of money that goes back into the economy. So again, it's all about liquidity. We're looking at liquidity and we're looking to see where money is going to come from. Where is money going to come from to build this up? And we can see that money is coming from Asia, money is coming from the bank bailouts, money's coming from the US because the US is bailing out the banks, and now potentially they're not going to increase interest rates. Potentially they're not going to increase interest rates. There's also more reason to believe that they're not going to be as aggressive in increasing interest rates. Why? Because we always said that the Fed will continue to raise rates until something breaks. Now what we get, and we can see this, you can see it in this chart. This is a chart of every time that the Fed has raised rates. And what you can see in this chart, which I find super interesting, is that the Fed increases interest rates quite slowly. You see, so it's like the increases in interest rates usually are quite slowly. This one was super aggressive, but look at the trend. Increase slowly, drop quickly. Increase slowly, drop quickly. Increase slowly, drop quickly. Increase slowly, drop quickly. Why? Because the Fed, it's almost like the Fed tighten and tighten and tighten until such time as something breaks. And when something breaks, what they need to do is they need to do an extreme U-turn to make sure that it doesn't create a contagion. It doesn't break even further. And that's what happens. So that's why what usually happens, as you can see, I mean, look at this here. From 1945 all the way to 1975, the Fed increased and increased and increased and increased rates slowly. And then when something broke, bang, they reduced interest rates to fix it. And that is exactly what I think is going to happen now, because now you've got two things that are broken. One is the banking system's broken. The second thing that's broken is the treasury market's broken. So you can see that treasury markets don't usually react like this. I mean, they're not supposed to act like crypto coins that are delisted from Binance. That's not how Fed or how bond rates are supposed to work. But now when you look at the 1-year bond rate, which is the return that you get on buying government bonds for a year, it's now coming down to 4.28%, which says that the market is expecting interest rates to come down this year. If you look at the 2-year treasury yield, again, drop to 3.89, which means that the market is expecting interest rates to keep dropping between year 1 and year 2. And even if you look at the 10-year treasury yield, it's dropping. Something has broken. The bond market has broken. The banks have broken. And we're also getting a mix of data. So yesterday, we had very, very, very good PPE data. For those of you who don't know what PPE data is, it's the producer price index, which is effectively what producers pay, or the increase in prices that producers pay. What we saw yesterday was we saw that the PPI came down from a last reading of 5.7 to this reading of 4.6. Now, what you can see is that that is the most aggressive decrease in prices that we've had probably since the beginning of this COVID thing. You can see that this is the most aggressive decrease in prices that we've had. What that means is that inflation, because this is the producer inflation, and producers are manufacturing things, and those things are going to hit the shelves in about 2 to 3 months. What you can assume from this is that this kind of reduction would take place, will take place in a couple of months when these products hit the shelf. So when these products hit the shelf, you can say the price is 5.7. And when these products hit the shelf, the price is going to be 4.6. And that's going to show you that inflation is coming down. The job markets, we did have job numbers come out today. They were strong again. But I think that right now, it's not about the jobs market. I think right now, it's about inflation, making sure that inflation is coming down. And yes, inflation does look like it's coming down. You can see it. And then the next part of it is to make sure that the banks don't break. And I think that Powell got a warning shot. I think I'm still hopeful that we might get a 0 interest rate increase. I do think now that we're going to get 25 basis points. Why? Because I think the ECB sets a precedent. And it's almost like Powell will feel like a chicken shit. You know, like imagine Powell doesn't increase interest rates. He's like, well, the Europeans managed to increase interest rates. How could you not do it? So I think Powell watched the Europeans and thought, gee, you guys have really killed my vibe here, because I was going to not raise interest rates next week. And now you guys are raising interest rates. I'm just checking our research group just to see if any news is broken while we have been on live with you. Okay, all the news is about Arbitrum airdrop. We're going to talk about the Arbitrum airdrop now, I think. So remember that I said to you that when the Arbitrum airdrop hits the market, that is your signal to buy the market. And the reason why I said that's your signal to buy the market is, again, it's using today's keyword, which is liquidity. Because remember, the more money that there is in the market, the more liquidity that there is in the market, the more people are going to buy. The more people are going to buy prices up. And now they've announced that the Arbitrum airdrop is going live, and it's going live on the 23rd of March. We showed you guys the video as we started. Now, it's been teased all day. In fact, I knew it was coming. I actually tweeted and I said, does anyone know what time the Arbitrum airdrop is today? Because Bankless, 𝗕𝗏𝗃𝗁, a whole lot of other people teased it. But now we're getting this Arbitrum airdrop. And if you read the article over here, they have, so we know the total value locked is about 3.69 billion. So it says here, it says as follows: 11.5% of the total supply eligible to Arbitrum community will control 56% of the tokens. The airdrop will get 11.5% of the total supply for eligible users. So that means that if you make an assumption that the Arbitrum airdrop will be, that the Arbitrum total market cap will be 9 billion, which is just what I've taken from Optimism, even though I think Arbitrum is much bigger than Optimism. So I think this comes out at a fully diluted market valuation of about 10 or 11 billion dollars. If you get an airdrop of 11.5% of that, it's like they're dropping free money, another stimulus of $1 billion. And when that $1 billion hits the market, there's no doubt that that $1 billion is going to drive up the price of Ethereum, the price of Bitcoin, and the price of a whole lot of other tokens. So you got to pay attention to when this comes out. If you were paying attention earlier, you would have seen that all the Arbitrum airdrop, all the Arbitrum tokens were running. So look at the Arbitrum airdrop, the Arbitrum tokens. 𝗕𝗏𝗃𝗁 up 6.66%, Unami up 28%, 𝗓𝗏 up 11.7%, GNS, which we've told you to buy at about $3, is up 20%. GMX, I think, is also up a lot. I just don't see it on this chart. That is because people are airdrop farming. What they want to do is they want to use all the protocols. And if you use the protocols, chances are you will get an airdrop. So if you have been trading on our partner GNS, you probably would get the airdrop. And if you haven't, well, go down to, there's a link below, use the link below, open an account, trade. You may actually get some of the airdrop, okay? So that's that. If you want to check your eligibility for this airdrop, there is a website. Go to the Arbitrum Foundation. You connect your wallet. So you click and connect your wallet. And when you click and connect your wallet, it will tell you whether or not you are eligible for the Arbitrum airdrop. And I think it will also tell you how many tokens you're going to get. So if you've used GMX, GNS, Magic, 𝗓𝗏𝗍𝗏, all the other Arbitrum ecosystem tokens, which are listed here, and probably there's a whole lot more that we haven't listed here. But if you have used those, chances are you're getting free money. And when you get free money, that's going to mean more liquidity. And more liquidity means, you guessed it, price number go up. So don't discount how big these airdrops are in getting money into the market. We saw it when Blur did their airdrop and they dropped $400 million onto the market. And you saw what happened. So mark this in your diaries. The 23rd of March will be an unbelievably good day for Bitcoin. It will be just after the inflation numbers. So we have to monitor what, not the inflation numbers, the FOMC interest rate increase numbers. You couldn't have got your drop. Web3Me, you couldn't have got your drop. All right, I don't believe that we've done roll call today. So let's just make sure everybody's here. We haven't checked. All right, Ferdy, are you here? Raymond, are you here?
Yes, sir.
Hey, present, bro. James, are you here? Sir. Josh, are you here? Frederick, are you here? Fred's died.
Man, where all that? Where's the excitement at? Let's get.
Where's the excitement at? Exactly. All right, if you here, say present. Robert, if you here, say present. Gabby, the DJ, I know you're present. You're always here. Yassine LaRue, you're present. Who else? Henry, if you here, say present. Okay, I see everybody's here. Everybody's in the chat. Everybody's paying attention. I hope you guys got some Arbitrum airdrop because it's free money, literally free money for using protocols. That is exactly what it is. It's just literally getting free money. All right, let's look at some other things that I saw on Bitcoin. There were a whole lot of other things which I did see on Bitcoin, which I want to just check here. First thing is, it's a very mixed bag when you look at the fundamentals. So the first thing is about $1 billion of Bitcoin went onto exchanges in the last couple of days, which is weird because the price is going up, but all these Bitcoin are actually going onto exchanges. then you are also getting a whole lot of funds. In fact, some funds sold 17,000 Bitcoin. So if you look at the funds have been dumping their Bitcoin onto this market. At the same time, you're getting a very interesting dynamic because people moved out of BUSD to USDC when there was the SEC attack on BUSD. Then people moved from USDC. So following fiat backing concerns, people fled from USDC to cash in the bank. Following the banking collapse, people are now moving on to Bitcoin. So that's what you're seeing. And at the same time, Fidelity, they went live with giving access to their millions of consumers access to Bitcoin. So that's on the one side of things. That's pretty much what's happening on the one side of things. But on the other side of things, there's something else that's happening, which you need to be aware of, and we have spoken about it. That is Operation Choke Point. That is the government's way of restricting the amount of money that comes onto the crypto ecosystem. And there were some naysayers who said, no, it's not a real thing. Operation Choke Point is not a real thing. But let me tell you that Operation Choke Point is a very, very, very real thing. And I'll show you some things that happened which may change your mind. So the first thing is, the FHLB says they didn't compel Silvergate to prepay their advance. However, that prepayment is what triggered the SI collapse. So what it means is that Silvergate inexplicably committed suicide. Effectively, what they're saying is we can't speculate as to what went into Silvergate's final decision to prepay. However, the existing tenure of their remaining advances before the prepayment was short-term. So essentially, they're saying we did not request Silvergate to prepay its outstanding advances, and they prepaid it, which actually put them into liquidation. That doesn't sound right. At the same time, we heard, based on a Reuters article, so it comes from Reuters, and they're looking for bids for Signature Bank. Now, when they're looking for bids for Signature Bank, one of the things that they're saying in the article is only bidders with an existing banking charter will be allowed to study the bank's financials ahead of submitting an offer, a move which is aimed at giving traditional lenders an advantage over private equity firms. Okay, that's the first thing. They want to give more power to the bigger banks, but then they're saying any buyer of Signature must agree to give up all the crypto business at the bank. Now, if that doesn't tell you that this is an attack on crypto, then I don't think anybody is gonna say it. And Mike Duda said it. He said, well, there you have it. Any buyer of Signature must agree to give up all the crypto business at the bank. This is Operation Choke Point. And we did get Senator Tom Emmer write a letter to, so he writes a letter to the chairman of the FDIC. And he says, look, in the letter, he wants to know the following. He wants to know, has the FDIC instructed banks under supervision not to provide crypto firm banking services? If yes, please explain the analysis for this instruction. Please explain, in your view, the goal for the instruction, if not to discourage banks from servicing the digital asset clients. Have you communicated implicitly or explicitly to any banks that their supervision will be more onerous in any way if they take on new or existing digital asset clients? He says there have also been allegations that these banks' closures happened because crypto is risky, when in reality institutions appear to have been impacted less by the volatility of digital assets and more by the unprecedented interest rate hikes that we've witnessed over the last 12 months. What, if any, guidance has the FDIC provided to financial institutions to help them manage and mitigate the risk of rising rates? So he's saying, look, I want to know from you if you have ever told the banks that they're not allowed to service crypto. And if that is the case, then I want to know why. I want to know why. Now, look, I love the senator. I really do. I think he's amazing for crypto. But the truth is, as I said to him yesterday, this is amazing. Problem is that these guys don't reply. People like Gary Gensler just don't reply to these senator letters. So yes, it's great to see that he's canvassing for us and he's fighting for us, but they're not going to reply. That's the problem. They do not reply. That is the big issue here. Someone says pump incoming. Let's check the prices. No, let's say, I did say to you, I think Bitcoin's going to go up, and I think in 24 hours, it's going to be above 25,000 because people are going they're going to realize what the effect of all this liquidity and the Arbitrum airdrop is. Maybe it'll be past 25,000 while we're live here. Maybe it'll be past 25,000 while we're live here. We're going to stay with you and we will watch that. I also want to show you this. So the Fed seems to be launching its own service, it's a payment service called Payment Now, which is immediate clearance, which is potentially a crypto. It's potentially on a blockchain. It's potentially a central bank digital currency. And it says the Fed said it plans to launch a new instant payment service in July. The Fed will begin formally certifying participants next month, and early adopters will undergo testing in this program. So maybe the reason why the Fed is doing this now, why they're closing down the crypto banks now, is because they want a monopoly here. Also, in Operation Choke Point, Gary, I don't want to swear because then YouTube will destroy the videos here. Mohit, I have spoken about the Arbitrum airdrop, and we will. Oh, you're talking about the Banter airdrop, but we will talk about that. So Gary Gensler says that proof of stake tokens are securities. This is a huge attack. It's not only an attack on Ethereum, it's a huge attack on Solana, it's a huge attack on even Cardano. He's even attacking Cardano here. I don't think he knows what happens if you attack the Cardano community. I think he's going to find out after the show. But what he's saying here, he's saying, look, if you invest the tokens anticipating a return on these tokens, then because you are anticipating a return on these tokens, then that is a security. And so he's saying because ETH went from proof of work to proof of stake, well, ETH is a security and Cardano is a security. And all of these are securities. He's saying any proof of stake token may be a security. Now, I think he's going to get proved wrong, but it is part of this ongoing attack onto crypto. They are trying to kill the on-ramps and the off-ramps to crypto. They really are, and it's all over the world. In the UK, Binance announced that they can't take any more great GBP deposits. In the US, they announced they can't take on USD deposits. I do want to highlight something to you, and I'm not trying to plug you a sponsor, but we do have a sponsor called Tap Global. Tap Global is an on-ramp and off-ramp in over 40 countries to crypto. So if you are worried about that, go and open an account on Tap. And if you are part of the Banter community and you're in the US, go and sign up for the US Tap waiting list. And you'll get between $0 and $100 in Bitcoin as a free airdrop. But more importantly, this could serve as your on-ramp and off-ramp because they are registered and they are licensed in a lot of countries, and they will get a US license. It's coming very soon. And you will be able to use this as the on-ramp and off-ramp. So make sure that you go there now, sign up. And if it costs you nothing to sign up, and you can actually get a Tap card. So I think you should go there now. You should sign up and go and check it out. I didn't try and plug a sponsor. You want to talk about choke point? That's one of the ways to get off the choke point. All right, another a token that we don't really talk about a lot, but we should probably talk about today is Shibereum, because there's a lot of FUD going around Shibereum. It looks like their entire metaverse team was fired and replaced without clear communication. The fired team members took over the Discord and started FUDding, and now what they're doing is they're accusing Shibereum of not actually using their own technology, but actually using Rinier's testnet and changing the name. And how they found this was they found that the chain ID hadn't been changed. So that's what's going on here. BitBoy saying he's going to dox the founder of Shib in the coming week. This is maybe tomorrow. So I don't know. Let's see if he does. Maybe he'll go stand outside his house again wearing an island shirt. I don't know. Anyway, their team have come back. They have come back. I was reading this article earlier. They said, what happened was a few chain IDs were randomly picked, and these chains were not registered anyway at the time. I made the mistake not to recheck when PuppyNet Network was launched. One of the pseudonym developers, the developers are trying to defend all of this. I don't think that this is done very well for all the Bone, Leash, Paw, and all those other tokens. Let's quickly just look at what these tokens are doing. Down 15% today. Let's look at Leash. Down 11% today. Let's look at Shib. Down 3.9% today. So it is spreading to all the Dogecoin, all the meme coin SHIB related tokens because of this FUD. All right, a few other things. Uniswap now live on BNB. Remember, there was a huge debacle about that, about how 𝗍𝗏𝗍 would vote. 𝗍𝗏𝗍 didn't vote eventually, and now Uniswap is live on Arbitrum. I also want to introduce you to who I think is the biggest fool in the world. This is a guy who swapped his Lido tokens, $3.4 million, 3.4 million Lido tokens, $8.2 million, received and then he went to Binance and he bought SingularityNet for $3.6 million. Why would you sell out of Lido into SingularityNet? This guy is a whale, but he's not going to be a whale for very long, I can tell you that much. Also interesting, Sam Bankman-Fried withdrew $2.2 billion from FTX before the collapse. He walked away with $2.2 billion before the collapse. That's a huge number. That is a huge number. Tomorrow, there is an announcement coming out by 𝗵𝗵𝗍𝗶𝗍. We're going to follow that announcement. Again, I do think the tokens run a lot. But I think if Bitcoin, you see, Bitcoin's going back for that 25,000. It's just go. Block Gambit, well done if you tripled your account. Well done, well done, well done. I'm glad. I want you all to make life-changing money. I really do. I think it's amazing. In fact, because I want you to make life-changing money, maybe we should talk about options for a little bit, because we don't talk about options enough. And I think that leverage is great. And we have got a lot of leverage partners, Bybit, we've got BitGet, we've got OKX. But we don't often talk about why you should use options. And if you want to be a big and good trader, you need to grasp this concept. Someone says, where is Banter's Tap Global link? Can we move that one to the top? Yeah. Great. So let's move that one to the top so everyone can see it, because people are saying they can't find it. All right, so let's look at options. Now, I want to show you what options are. So we have a partner. Our partner is Deribit. Just want to show you. You can open a Deribit account below. If you do open an account and you do the KYC, because you can't trade options on Deribit without KYC, you will get a sign-up bonus. We'll confirm tomorrow what the sign-up bonus will be, but everybody will get it. And I want to show you why you should use options, because if you use leverage can get your whole account wiped, whereas options limit the amount that you can lose, but actually still give you a leverage-like position. And there are really few reasons why you should use options. The first reason is you want to speculate, you want to make money. You can actually make money on options as instruments. That's the first thing. Second thing is, if you don't have enough money and you want to avoid losses on your portfolio, or if you want to take a position but you don't have enough money. So say, for example, you want to buy Bitcoin, but you don't have enough money to buy Bitcoin. Well, you can just buy an option to buy Bitcoin. And I want to show you how amazing this actually is. So what is an option? An option is exactly what it says. It's the option. It gives you the option to buy something or sell something at a predetermined price on a predetermined date. So you can buy an option to buy Ethereum at a predetermined price on a predetermined date. So imagine I said to you, hey, do you think that ETH is going to go up in value? You say yes. I say, well, listen, why don't you buy an option to buy Ethereum at today's price in a year's time? You'd say, wow, that's amazing. So today ETH is trading at 1.6. You're giving me the option in a year's time to buy Ethereum for 1.6. That's like a no-brainer, right? But you have to pay me for the option. So I'll say to you, listen, if you want the option to buy ETH at 1.6 in December, then you need to pay me. You need to pay me, in this case, $375. So if you pay me $375, I will give you the option to buy Ethereum at 1,600 on the 23rd of December. So every option that you use is going to have a strike price, which is the price at which the option is it's exactly, Yuri says it right. It's a right, but not the obligation. Now, let's see how we can use options. I want to show you, I built the spreadsheet for you guys to show you how effective options are. So let's say that we're looking at the end of the year, and I come to you and I say to you, listen, do you want to buy Ethereum at the end of the year? You say to me, yes, I do. You say, but I don't have $1,600 now. I say, cool, don't do that. But pay me, in this case, pay me $373. And if you pay me $373, I will give you the right to buy an option at $1,600. I'll give you the right to buy them at $1,600. So we said the price of the option is $350, and the strike price is $1,600, and the date is the 29th of December. Now, look what happens. If ETH goes to 4,000 at the end of the year, then you make $2,400 less the amount that you pay for the option. So you would pay me $350 now, and at the end of the year, I would actually have to bring you an Ethereum at $1,600. So the total profit that you'd make is $2,050. So you would invest $350 and you would make $2,050. So you're getting the same return or even a better return than using leverage, but you don't take the chance that your account is going to get a margin call or get wiped. And that's why big traders use options. Now, today I've showed you a call option, which is the right to buy something. Tomorrow or Monday, I'll show you a put option, which is the right to sell something. So if you think, for example, the price of ETH is going to go down, then to protect your portfolio, what you could do is just sell an option. Or sorry, you could buy a put option. And if you bought a put option, you would have the right to sell ETH at a certain price if the price goes down. So I'll show you a quick example. If you're worried that the price of ETH is going to go down by the end of the year, you can protect your portfolio. What do? You buy a put option, which is the right to sell ETH. And in this case, I said you buy it with a strike price of $1,600. What this means that if ETH goes down to $1,000, you have the right to sell your ETH at $1,600. And if you can sell your ETH at $1,600, when the price of ETH is $1,000, you make a $600 profit, or you save yourself from a $600 loss. Okay, but that cost you $295. So the net amount of money that you make is you make $305, or you save yourself a loss of $305, and all you did was have to buy an option. So that is why people use options. You need to have options in your portfolio or in your toolkit if you are going to be a serious trader, because the options market is a huge market. It's a $612 trillion market. It's much bigger than the underlying markets, because people understand that if you want to be smart, you need a way to hedge your portfolio. If you're worried that if you're holding 10 ETH and you're worried that the price of ETH is going to go down, well, you can deploy a hedge strategy. You can say, look, I'm worried that the price of ETH is going to collapse because of the Shanghai upgrade, because of whatever else. If you're worried, what you can do is you can protect your portfolio against the downside by buying a put option. So if you buy a put option at $1,600, if you got 10 ETH, the price of your ETH today is $1,660, which means your portfolio is valued at $16,600. You want to protect your portfolio against the downside. You go to Deribit and you say, okay, I want to buy a put option, which is the right to sell Ethereum at the 29th of December, which is a strike price. That'll cost you $305. Okay, that's the price. So you buy 10 options, 10 put options. Now you have the right to sell 10 Ethereum at $1,600 in December, which means that if ETH goes up, nothing happens. You just lose the amount of money that you put down, the $295 times 10. But if the price of ETH goes down and goes to zero, well, the maximum loss that you're going to take, because you can now sell your ETH at $1,600. So the maximum loss you're going to take is the $1,600 less the $295 that you paid. You've taken a $295 loss. You've lost $2,950. And the worst case that your portfolio can go down to is $13,650. So it's the cheapest way. It really, really, really is the cheapest way to get upside and the cheapest way to protect against downside in a portfolio. And we're going to spend a lot of time talking about it because it's a much more powerful tool than leverage. It's a much safer tool than leverage. And today, the biggest exchange that offers options is Deribit. And what you need to do to get in on the action is go and open an account. You can't trade options without doing a KYC. So just do the KYC. It's not a big deal. Just do the KYC. And then we can actually start trading options and protecting our portfolios. If you think there's a cataclysmic event that's coming, well, just use options to hedge your portfolio. If you're worried about the ETH Shanghai upgrade, then you go to the options strike price after Shanghai, which is probably the 28th of April, and you can protect your portfolio. So for example, let me show you how cool this is. You can buy a put option at $1,600 and you pay $100. If you think that there's going to be a major ETH Shanghai dump, for every ETH that you have in your wallet, just buy one put. Cool, you'll lose $100. If ETH dumps, you can sell your ETH at $1,600. If ETH pumps, you get all the upside. It's really, it's a no-brainer. It's really, 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 really is a no-brainer. You got to learn to trade options because it's the easiest and cheapest way to get upside, and it's the cheapest way to protect your portfolio. And if you want to be a master trader, all master traders know how to use options. You cannot be a master trader, master investor without using options because you're doing it inefficiently. All right, that's my rant. Lastly, last call for Sniper School. If you want to be part of Sniper School, go and sign up like almost immediately. And I want to just show you quickly while we're all here. I want to show you how amazing Sniper School is. You do get to live trade with Sheldon. That's what he was doing now. He was live trading with all the crypto school people. But so how it works, how Sniper School works is you do a 3-week course. The 3 weeks is you have to watch videos at your own time. Here are the videos. Show you how cool the videos are. Here they are. Just show you quickly how cool the videos are. You don't have to watch the whole video with me. It's an amazing mobile platform and a desktop platform. Let's just show you quickly how cool this is.
When I first started trading, I got wrecked many times. It got so bad that I had one trade where I lost over 95% of my capital. Why? Because I really sucked at managing my risk. On the other side of the coin, there were many times where I made so much money, but I ended up never taking my profits because I thought my gains were going to continue and just keep going up. And then I went on this roller coaster of being rich one day, poor one day, rich, poor, and I kept on repeating the cycle until I found a little tool that changed everything for me. And this is the risk to reward ratio tool.
So he takes you through all the tools. Then you have live workshops with him where you trade. Then, listen to this. If you finish Sniper School and you want to go into an intense 3-month real trading, in other words, basically you sit on Zoom with traders every day, all day for 3 or 4 hours, not all day, 3 or 4 hours. And you guys all trade together. That's what we call Sniper School University. And you have to get through Sniper School to get into Sniper School University. So what you need to do is sign up. There is a link below. We're only taking in 2,500 people. I think when I checked yesterday, there were 1,800 people signed up. Sign up. It's free, guys. Just do it. Join us. Trade with us. 3 hours every single day. Just go and do it. You're not going to get a chance like this again. And when this cohort's full, it's full. All right, let's check the research group one last time and just see if anything's coming out. Airdrop criteria. There are 5 airdrop. Oh, let's quickly read this. I think this is important. I know we're a little bit over time today, but I think it's important that we talk about this. All right, there are 5 criteria. Arbitrum 1, conducted transactions, number, US dollar value, and time thresholds. Has bridged liquidity into Arbitrum. Negative criteria. All transactions occurred below a certain time threshold, balance of the decade. Arbitrum Nova. dApps and governance. Have you participated in any dApps and any governance? So this is essentially what you need to do to get your Arbitrum airdrop. It seems like the airdrops are getting smaller and smaller. I see that. Okay, I'm also being reminded here. People are shouting at me to remind you that tomorrow there's a big Friday banter. Alex Kruger, 𝗧𝗵𝗍 and Grant Cardone. Very excited to have Grant Cardone. He's got a huge channel. It's got like 2 million people on his channel. He's coming here tomorrow for Friday banter. So that's going to be huge. I will see you guys again tomorrow. Or if you want, you can catch me on the Paul Barron show in a few minutes. Is there anything else? Nope. Okay, well then trade well, my friends.